Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top dividend stocks to buy right now that will not only grant you amazing passive income, but it will also stabilize your portfolio, which will prevent you from receiving unnecessary losses during times of macroeconomic uncertainty, such as the times that we are in right now, with increasing interest rates and very high inflation. There's also a lot of geopolitical drama going on in the world right now, so we would want to buy stable stocks that are going to give us cash flow in the form of dividends so we can receive passive income. In this video, we're going to be focusing on 5 companies that have a very high forward dividend yield. So without further ado, I say let's just jump into today's stories. But if you want more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just get right into it. Basically, dividend stocks are stocks of companies that pay out a portion of their earnings to investors and shareholders on a regular basis, and normally this comes in the form of either quarterly, monthly, or annual dividends, but the most common dividend payout that I've noticed is definitely quarterly dividends. So in this video, we're going to talk about the top 5 dividend stocks in the Russell 1000 index that have an amazing forward dividend yield. We're going to start off with ticker symbol NLY, and they have a forward dividend yield of, get a load of this, 14.99%, and recently this has actually even increased to around 20% because the stock price has fallen after their 1-for-4 reverse stock split. So as you can see on screen, their original price was $5.87, but because of the 1-for-4 reverse stock split, that has caused the price to jump to $16 per share now. Now this is not due to the growth of their particular stock, this is only due to the 1-for-4 reverse stock split, which also is going to increase their dividend per share. Their payout ratio is moderate, coming in at around 36.27%, and while the current stock price is $16, analysts believe the company should be worth anywhere between $18 and $27 over the next 12 months, but stock experts say that this company is a holding opportunity, which means if you already own this company, it's best to hold this company, but if you're not already in this company, you may not want to buy it as of right now, because the current stock price could definitely drop down more. But again, if you're just investing into this company for passive income, this has one of the highest dividend yields on the market, coming in between 15% and 20% right now. This is a very diversified capital management company that facilitates, administrates, and operates a real estate investment trust. Now, if you're familiar with a REIT, you know that these particular types of companies have very high dividend payouts because by law they are required to pay out a huge portion of their overall earnings to shareholders, and that's why this particular company has such a high forward dividend yield. This company has major investments across the mortgage finance industry, and they have a load of mortgage-backed securities. And like I said earlier, they had a 1-for-4 reverse stock split, which increased their dividend per share from 22 cents per share on a quarterly basis all the way up to almost $1, coming in at 88 cents per share, which is very high for only a $16 current stock price. So overall, this is a very good company that you could buy if you want passive income in the form of a quarterly dividend. The next company we're going to talk about is OneMain Holdings Inc., ticker symbol OMF. This company has a very impressive forward dividend yield, not as high as ticker symbol NLY, but still pretty impressive, coming in at around 12.18%. The payout ratio for this company is substantially higher at 84.07%, and it's a lower market cap company, coming in at only $3.9 billion. The current stock price of OMF is $31, while stock professionals believe the company should be trading at anywhere between $36 and $67 over the next 12 months, which means we could arguably say that the current stock price of $31 is somewhat undervalued, and stock stock experts believe this company should be a buy rating on investors' radar. So I personally own this particular company because I do enjoy the dividend payout and their very high payout ratio. On top of this company is a very small company that I believe still has great upside in the future, potentially being able to double investors' money over the long term. So maybe over the long term, it's actually smart to buy a finance company, specifically one that has a very high dividend yield. Another reason why this forward dividend yield is so impressive to me is that as the stock price, if it drops due to macroeconomic uncertainty, we will see this forward dividend yield increase and offset any risk you get from the loss of the stock price appreciation. And like I said in the beginning, if you are an investor who wants that passive income in the form of a dividend, this is clearly the stock for you, because not only does it offset risk of losing money due to the stock price falling, but at the same time that actually causes the forward dividend yield to increase in this particular regard. So again, this is a very solid company that I myself own. The next company we're going to talk about is a pretty popular company among dividend investors, and that is Lumen Technologies Inc., ticker symbol LUMN. And that is their ticker symbol, ticker name Lumen. This company has a pretty solid forward dividend yield of 12.02% and a good payout ratio of 52.33%. Now, I do want to add that the current stock price has been falling because originally when this article was written, the price was $8.32, but right now the stock price has fallen to around $6.64, which is directly in line with analysts' estimates, coming in between the range of $6 on the low end and $12 on the high end. However, with that being said, professionals do say to sell this company because there is future negative downside potential in the future, according to stock experts. However, that's only if you are focused more on the stock price appreciation, because clearly over the last year, the stock has fallen pretty dramatically. But if you're not in this company for the particular stock price or the stock price appreciation, and you're just focusing on that dividend yield, then this company is going to give you fantastic passive income. Lumen Technologies is essentially a technology and communications company that helps businesses use their data, and it helps them adopt new technologies to run their business more efficiently. They have a plethora of different services, and they have customers that are literally all over the world. So they help businesses worldwide, which is very, very impressive. This company overall is not impressive to me personally. I do not own this particular company, mainly because experts say to sell this company right now due to not only the negative macroeconomic environment, but I don't think the dividend yield is high enough to offset the falling stock price. But to each their own. If you like Lumen Technologies, I do know a lot of dividend investors that enjoy this company mainly for the passive income benefits that it gives investors, but because the majority of these companies are small cap companies, I do think there is future potential in all of these companies to a certain degree. However, Lumen is not going to be one of my top picks, but again, you probably have a different strategy than I do because I am not a dividend investor. And if you are a dividend investor, comment down below what you think of Lumen Technologies. I would love to hear your thoughts on it because I know it is a beloved stock for a multitude of different passive income type investors. Lastly, we're coming to the second to last company that I'm going to be talking about, and that is Rithm Capital Corp, ticker symbol RITM. And I personally do own this particular company because this is again another REIT company, and I do love REIT companies. That means this is again a public real estate investment trust, and they were formerly known as New Residential Investment Corp, but recently changed their name to Rithm Capital Corp. And right now, to me, it's trading at a substantial discount. They have a very good forward dividend yield coming in at 11.89% and a payout ratio of 49.83%. Again, this is another small cap company coming in at only $3.9 billion, but according to experts, this company is undervalued, coming in at only $7 per share when it should be trading between $9 and $13 over the next year. Experts also reiterate that professionals believe this company is undervalued and investors investors should buy this company according to their growth prospects for both the dividend yield as well as the stock price, and that's why I personally own this particular company. For their common stock, you're going to get around 25 cents per share worth of dividend income per quarter. So again, this is another very strong dividend yielding company where you're going to get 25 cents per share per quarter while only investing $7 into this company. And again, that $7 could grow between $9 and $13. So overall, again, this is a very good company that I personally have in my portfolio. My portfolio has a plethora of different large cap, medium cap, and small cap companies, such as Rithm Capital, because again, their market cap is only coming in at $3.9 billion. But I think the company has a solid forward dividend yield. The price is very enticing. The payout ratio is very foundational to this company, and I believe this company is going to be a very good long-term winner. Now, we could see a lot more pain in real estate stocks and even REIT companies because real estate is set to crash, or at least is crashing due to the higher interest rate economy that we are in right now. But while stocks are falling, including real estate companies, that's the time where I actually buy up companies like this because they are trading at a substantial discount, and that allows me to get future upside when I invest into these types of companies. And last but not least, we have another favorite dividend stock among investors, which is Devon Energy Corp, ticker symbol DVN. The company currently trades at $67 per share, while professionals believe the company should be trading between $57 and $109, which it is doing right now. However, stock professionals and experts believe this company is a holding opportunity. If you have this company, to hold it, and if you're not in this company yet, you probably shouldn't buy into it, and I'll tell you why. The reason why Devon Energy Corp is so hyped right now and it's had a one-year return of 123.7% is because energy companies have absolutely skyrocketed due to the geopolitical drama between Russia and Ukraine. Now, without this, and eventually that will cool off, we're going to see the stock price of Devon Energy Corp return to its normal level. So right now, it's very hyped up because a lot of energy companies are absolutely exploding in their stock price right now, which is good, but I don't anticipate this is going to be a good long-term investment overall, which is why I personally am not in this company. The forward dividend yield for this company is very good, coming in at 9.82%. The payout ratio is 45.2%, and the price is decently cheap, and it's even appreciated from when this article was written, because originally it was $63, and now it is probably over $67 at the time of this video. And over the last year, it's given their investors a 123.7% run up, so clearly I saved the best for last. Now, if you're wondering what this company does, it's an oil and gas exploration, development, and production company. This company also transports oil, gas, and other related products to natural gas products or derivatives that you can derive from either gas or oil. So overall, this is a good company. Now, I personally think there are other better energy companies out there, probably like Next Era Energy and a couple others, but overall, if you're just focusing on that forward dividend yield for that passive income, then Devon Energy Corp could be the company for you. But overall, I do not hold this particular investment. So out of these 5 companies, what are my final educated professional thoughts on these companies? So Devon is definitely a no, and then for Rithm Capital Corp, I'm saying yes because I do own this company and I do buy this company. Very good dividend yield, very good payout ratio. Lumen Technologies, too risky for me. I'm just not really in it, and I anticipate that the stock price will fall further in that particular company. And then OneMain Holdings, that's another check mark from me. I do own this company and I have bought up more of it recently. And then going all the way back to ticker symbol NLY, I don't like this company, even though it is a REIT company and I do like REIT companies. I just don't see the appeal to this particular REIT company as of right now. But I would love to hear your thoughts down below about all or any of these dividend stocks. Let me know if you want to see more videos like this one to tell you what are the best stocks to buy on the stock market right now, whether that be growth stocks or dividend stocks. And I'm also letting you all in on what stocks I am buying at the same time that I'm doing these videos. Because like I said, I have recently bought Rithm Capital Corp and OneMain Holdings. So if you want to know know more of the companies that I am buying, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.